All right, so today I'm going to talk about a concept. So most of you may or may not have heard of this depending on your background and experience, but it's basically swing trading with seasonal influences. So I'm going to get right to it. A little bit about my background first. I have my doctorate in finance. I've been actively trading for over 12 years, as well as teaching master level courses in finance and trading. Basically, I've been doing that for a long time and enjoy it so much that I decided, about a year ago, that I'm going to start publicly providing some services. I've traded futures, Forex, stocks, ETFs since 2006, and I've done it all. I've done swing trading, day trading, combination, futures, Forex, and I can tell you that over the years, I've been extremely lucky working for universities that have paid for my research. So I've been able to do extensive research and back test and play a lot of different type of scenarios throughout as part of my day-to-day job. So again, feel extremely lucky to do that and love teaching the financial markets. Then, about 2008, I was introduced to this concept of seasonality. And once somebody gave me, at the time, Larry Williams, who trades, been in the market for over 45 years, huge fan, mentor of mine, as well as Jake Bernstein. They have been really the fathers, as far as I'm concerned, of seasonality. So I've learned a lot of them over the years. And then from them, and with my university resources, have been able to kind of develop my own system based off of high probability trading. I like to specialize in seasonality because my trades statistically are going to work going into the trade 80% or higher based on past success. And then what I've been able to do over the years is gather a formula where if it's not doing certain things, so for example, let's say you're trading corn futures, and if all of a sudden it's not meeting the criteria what it has from previous years, then I'm not going to do the trade. So I do have setups, I have triggers, and it's been extremely successful over the years. I do trade off of, for the most part, the daily chart. And this, for today's webinar, my main goal is for swing traders, so that if you have a full-time job or you just don't want to be in the front of the computer all day, you can basically place trades, for example, at night going into the next session, and then you're going to have a stop, you're going to have your profit targets identified, you can set that all up ahead of time then, and then you can walk away and do your normal day-to-day routine. So again, big picture, what is seasonality? For those of you that may not be familiar, is basically any predictable change or pattern that repeats year over year. And almost every stock, all futures, ETFs have these predictable patterns. You just have to know how to find them and locate them. And that's what a lot of my research have done over the years, is been able to find the best of the best seasonal trades, and then you put it on your watch list, you wait for your triggers, and it's amazing how successful that can be over the long term. And I'm going to go over several examples today. So, and I will show live charts here shortly as well. So the S&P, typically right around the second week in November, it starts a good seasonal long time frame through around the Christmas holiday. Okay, in fact, 32 out of the last 36 years, price has been higher from the beginning of November till the end of December. Okay, so think about that just for a minute. Think of the power of that. No matter what type of trading you do, right? If you're a day trader, maybe during that time frame, you're mainly looking for long plays. Me as a swing trader, okay, I'm only looking to go for long plays, no short plays during that 6 to 8 week window, okay? A lot of people like to trade options as well. Maybe you do a 6 week option play. So again, just by knowing that the data is behind you, okay, in this case, 32 out of the last 36 years, 88% accuracy since 83, the S&P has gone higher during that time frame. There's a lot of ways to place that trade, right? So what I do is I scan for seasonals each week and look for potential trades based on my research. I use the daily chart, folks, and my entry And I have specific entry techniques that, again, if you're interested in the service, I'll show you and teach you on a different webinar. But again, they're all high probability trades, okay? I don't even look at a setup if it doesn't have at least 80% of past history accuracy. And then from there, I include my triggers, which can include things like momentum, the moving average channel method, and divergence. And a lot of times when I see a strong seasonal coming, I will use, my trigger will be the first one that triggers, okay? So for example, if I see a divergence play, then I'll go long or short once that divergence triggers and so forth. I have other factors included, like commitment of traders, small trader sentiment, and seasonal pattern mirror. So for example, commitment of traders, if the commercials are net long, the most long they've been in, let's say 10 years, that's extremely bullish. If that coincides with a strong seasonal pattern, then typically once I get my trigger, maybe off divergence, for example, I'm going to load in more contracts with those higher probabilities. Trader sentiment, unfortunately, a lot of retailer traders, let me just maximize the screen here. Hopefully you can see that better, it looks like it. A lot of things I do with, like for the example of the small trader sentiment, small traders are wrong. They take the wrong side of trades more times than not. So if you have data that tells you, for example, 80% of traders are short the euro, okay, that tells you once you get your trigger with the seasonal aspect, price is going to probably go higher, okay. Again, all my trades have 80% higher probability before I even take a look at them. If for some reason, at 65, 70%, I just go to the next trade. I risk about 2 times my initial target. When you're swing trading, you need to have room to breathe. Okay, I typically have pretty good entries, but you have to have room to breathe. So again, depending on your risk tolerance and the type of trading that you're doing, it's usually 2 times my initial target one, and I do a multiple contract system so that you can have room for these runners, which again, I'll show you examples. And then some recent feedback I got from my subscribers I think has been fantastic is, again, this initial service was for swing traders, trading off of daily charts, people with full-time jobs, or again, people who just didn't want to have to be in front of their computer all day. But I noticed a lot of day traders have joined this service, and again, just to make sure they're on the right side of the trade. So for example, if I do a trade alert where I'm saying, okay, I'm going long gold, right? Then during that time frame, they're only looking to play long side on gold. It's been working out extremely well for them. Even with swing trading, I will go into trades multiple times throughout the seasonal window. Seasonal windows can be anywhere from 2 days to 2 or 3 months long. Again, I explain that in my service. All right, so let's go to some live charts. I show you some examples. Okay, this is the micro Aussie dollar. Okay, with my service, I will trade regular size futures, micro size futures, options, all depending on the size of your account, and your risk tolerance plays a role in that, okay? So in this particular case, there is a seasonal trade to go long right around the 2nd week of April. So I was looking for my entry point. And again, this looks a lot like when basically my service, which I'll get to at the end of the presentation. I do a video presentation of my trades, and I always have my stop loss, for example, is right here, my entry point, my profit target 1, and my profit target 2, okay? And that's very important so that if you're new to trading especially, it's clear exactly what I'm looking for. So in this case, I entered on April 9th. Profit target 1 was hit 3 days later right here, okay? And here's the cool thing. So if you have a small account, for example, you may just trade 1 contract and get out at profit target 1 and make consistent income. And I'll show you my graph for the year here in a little bit later, okay? But in many cases, you're going to trade multiple contracts like I do. So then my profit target 2 is right up here. Now in this particular trade, it never got hit. But what I do is as soon as I hit profit target 1, which is right here, I move my stop to break even. Okay, so all the risk is off the table at that point. It's a fantastic feeling, right, to make book money in the trade. In this case, it was $820 for the regular size Aussie dollar, or if you're trading the micro, which is about 1/10 the size, you would have made $82. Okay, then all the risk is off. And then sure enough, it went sideways, and a couple days later, it stopped me out of break even. So my total gain on this particular trade was $820 on the regular size or $82 on the micro. Okay. Some of you also want to know about margins. So let me just show you. Cool thing about Thinkorswim, it brings it up live. So for the micro, your tick value is $1. Your initial margin per contract is $137. So those of you that have never swung trade and you're a little nervous about margin, overnight margin, okay, this tells you what you have to hold overnight. So in this case, only $137 a contract in order to hold this trade overnight, okay? And again, you already have your stop in place and your profit targets so that you can walk away and you know your trade is being managed, which is extremely important, right? Next one I'm going to talk about is Mexican peso. The Mexican peso is one of my favorite instruments to trade. It's got high seasonal influence, folks. This particular trade here, in July, 90% since the inception of the Mexican peso has gone higher. So again, think of the power of that. If you're going to trade straight futures, if you're going to do an option play, a stock play that can be used in conjunction with the peso, right? There's a lot of opportunities here, folks, okay? So again, I'm pretty conservative on my entry, knowing that, you know, high probability of making money. This was a July long based off of seasonality, okay? It started in this case a little bit earlier, which happens during strong seasonal patterns. The middle of June is when it started, you know, moving to back up to the upside. I got in right here on July 5th. Again, took no heat, but again, I did have my stop loss with peso. That's $540 per contract right here. And again, this is done in the video that I send to you. There's nothing hidden. I'm not out to trick anybody. You know, I'm an educator and I love teaching seasonals. But anyway, so 3 days later, it made profit target 1. So again, the beauty of that, folks, is I move my stop loss to break even. Okay, so if you are trading multiple contracts, you move your stop loss to break even. And then you can see it went sideways to up, and then it hit profit target 2 here a few days ago. So we booked another $985 for that one contract. Okay, now I still have my stop loss at break even. Depending on the seasonal, since I love this particular seasonal, for my last contract, I'm going to use a parabolic SAR and trail this up. Some folks will put their stop loss up to profit target 1. You know, again, at that point, it's totally up to you how you want to manage these trades. The beauty is that you're going to have these good trades where you can just let some runners run. I'm going to keep for my third contract, I'm keeping it at break even because I think the peso can continue to run for several more weeks potentially. Okay, in worst case, if not, I made money on 2 contracts. Okay. Overnight margin is $1,400 per contract. So on the Mexican peso, there's no micro at this point. You do have to have at least $1,400 overnight per contract to trade. But again, extremely accurate seasonals, very predictable. You just have to know what to look for. Okay, British pound. This is another trade that in April, and again, these are, by the way, these are all trades that I did with my subscription service this year. Just a few of the trades, but these are all trades. So all this is verifiable in case you have any questions on that. But anyway, I went long right here. Okay, again, once I go long, I place my stop, profit target 1, profit target 2. But I knew going into the second week of April, there was over an 85% chance that British pound was going to go higher. So once I found the entry based off of my techniques, right, 2 days later, we hit profit target 1. So again, folks, move my stop to break even on the other 2. It wicked up and got my profit target 2 before it started its descent down and stopped me out on my last contract to break even. So again, I made $893 per contract on the regular size. on the first profit target, or again, almost $90 on the micro, and $1,787 per contract hitting target 2 on the regular size, with $178 per contract on the micro. Okay. And again, if you just look at the British pound, you can see right here the initial margin is $1,700 a contract. But if you trade the micros, which is a great way to build that account, right, it's only $176, right? It's 1/10 the size. So, you know, you can have a $3,000 account, for example, trade 1 to 3 contracts and build that account up, okay? There's also, for example, I give recommendations of the XXB. It's basically the British pound ETF, okay? So you can also trade the ETFs. You can trade calls, okay, same way, okay? And I always give these recommendations as well. So depending on whether you're trading futures or stocks, okay, they're all out there for the taking. All right, another recent trade. I'm trying to show you as many recent ones as I can here. This is a current trade I have going on. I had a limit order to go along right here at 68.50 on the mini crude. So this is half the size of your regular size crude, okay? It knocked me in right here at 68.50, and then it met profit target 1 today, and I booked $700 again on the mini crude. So again, my stop now is break even, folks. The other 2 contracts, once I hit profit target 1, I'll get rid of the second contract, and then I'll keep the third one to see if it can run up to probably where all this resistance is, right up here around 74. Okay, so this is a very predictable move. On the move up, this is when the seasonal long started. I didn't get into the trade then. I waited for the pullback. A lot of support right here. Once we got that, back into the long. Okay, so again, if you know going into it that, hey, right around July is a great seasonal long in oil, in crude oil, okay, your likelihood of staying on in the right direction and making some money are over 80%. I'm just going to check questions real quick here. This is Thinkorswim Toss. This is actually the same platform, just looks a little bit different than what Wally was using. And the reason why I like Thinkorswim, you can use any platform. You know, they have the option to trade stocks, futures, ETFs, and so forth. Pretty much an all-in-one broker. If you're international, you may not be able to use Thinkorswim, but I also use TradeStation. You know, any broker is fine. They all have relatively the same amount of margins. You just would want to check with your individualized broker. Okay, let's talk a little bit about the E-minis, S&Ps. So we also have seasonals within seasonals, folks, okay? These are extremely high probability trades. So right around July 4th, again, this is based on my extensive back testing. You know, this isn't just by, hey, look, okay? This is over years and years of data, back testing, looking at certain windows and then keep running it to find the best seasonal time frames. And I call this the July 4th special, okay? And again, I originally learned this trade by Larry Williams, who again is a big seasonal trader, gentleman, but then I use my own research to find my own window time frames and so forth. Because again, you don't want to just go long, folks, or short during a seasonal window. You might take too much heat or get stopped out before the trade then goes in your direction, okay? Well, what I found is right around 2 days before the July 4th holiday, okay, it becomes extremely bullish. So based off me getting the trigger I was looking for, I went long here on July 2nd, and I'm still long. I did meet profit target 1 right here, profit target 2, and then my last contract, I have a parabolic SAR, and I believe it might have got stopped out today on that third contract right up here, okay? But you can see how powerful that is. And this typically works out almost every year, folks. I mean, over 90% accuracy. So again, think about that. If you're trading straight out futures, great, you can make lots of money. But maybe you want to do an option play, right? You can try the SPY or the SPX. Again, and typically with my service, especially if I'm going to trade the S&Ps, which have, you know, a lot of margin, a lot of risk at times, I will then do an option trade as well. I'm going to go over some of those examples here in just a couple minutes, okay? But there's a lot of ways to play that. And again, as a day trader, you're only looking for longs during this time. You probably would have made some pretty good money, folks. Okay, or maybe you're trading off the hourly charts. Okay, so again, if you know that, hey, during these next July 2nd up until late July, there's a good seasonal long. Okay, you're really going to help your odds of making money. Another one of my favorites to trade, very, very predictable, is lumber. Okay, and for example, you can also trade then the ETF wood, W-O-O-D. Okay, it doesn't have to just be the futures. You can trade the options of wood and so forth. But let me just go full back here to when I placed the trade. So again, March and April, 88% success rate of a long play here on lumber. Okay, so you're just looking, at this point, you're just waiting. You're waiting for the setup and then the trigger. Okay, I got in right here. Profit target 1 was made, 4 days later. So again, my stop was now moved to break even. Then it kind of went sideways, made a second move up. My profit target 2 was hit right here. Okay, then I trailed the third up with a parabolic SAR and got stopped out right about here, I believe it was. Okay, so just on that last runner, $8,900 a contract, right? So that's why a lot of people will say, well, why don't you just take profits at profit target 1? Because sometimes it'll hit profit target 1 and then, it'll stop me out of break even on the other 2 contracts. Again, I've run the analysis, and historically, even though I do, only taking profit, 1 contract profit here, you can take, you're losing some money when you get stopped out of break even, where you could have made more with 2 or 3 contracts. These runners far outweigh getting stopped out of break even on the 2nd or 3rd contract. Okay, and a lot of times you could have this happen for weeks and weeks and weeks at a time. Again, you're just eliminating your risk, and you continue to make money on these long seasonal trades. Okay, so again, very, very powerful trades. Lumber that time of year is extremely predictable. Again, it's just being patient with swing trading. You can see all the resistance right here, which is kind of going sideways. And then at that time I waited for the break, and it was a very successful trade. For you bond traders, I love trading bonds. This is a particular case where I was waiting to go long here. Okay, the month of June, extremely bullish bonds. Okay, so again, if you know that, you just wait, right? You're patient. Based on my techniques, you wait for the entry. So I got in right here and sent an alert out. I also have text alerts as well. And right here, same day, hit profit target 1. Okay, it doesn't always happen, but that was beautiful. So then I moved my stop up to break even, and then the next day, my other 2 contracts got stopped out of break even. So I made, $359 on this trade because the other 2 contracts got me out at break even. And then it made its move up to profit target 2, right? So sometimes that's just the breaks with it, but the key is, have a system and stick to it. And every time I hit profit target 1, I move my stop up to break even to eliminate those risks. It happened to move back down just a little bit before it made the rest of its move. And here's what I'm looking for right now on bonds, folks. The month of August is probably the most bullish month we have on bonds throughout the year. So I'm looking to re-enter once I have my trigger. Okay, so I have my setup, which is August, right at the beginning of August. Bonds tend to go higher. I'm just waiting for my trigger, and then I'll be going long bonds very shortly, hopefully. So again, with bonds, you can trade the ETFs as well. Okay, this is the TLT, which is a 20-year ETF for bonds. What I did in this particular case right here, which is on June 14th, I entered a call spread. I was in it for what, almost a week and a half or so, exited right here. So I got in at $1.40, got out at $2.01, so 43% gain. Okay, so again, especially with smaller accounts, if you're doing these spreads, right, you're not risking as much, but you can make some pretty good returns. And making a 43% return here in just a few days can quickly build up that account. Okay, So typically when I do a bonds trade, I will also do a TLT spread trade. All right, gold. This is one of my favorite trades as well every year. This one, again, my intent for today is show you the power of seasonality, right? And then if you sign up for my risk-free trial, I go on much more of the education side of it as well and how to look for these, okay? But so typically right around the middle of December, folks, I call this as my Santa play, okay? Gold's gonna go long, okay? It's gonna go higher from middle of December, sometimes through March, okay, depending on the year. But the point is, right around the middle of December, I'm looking for a long play. This particular year, this year, we had the bottom right here. I entered right here. Again, just look at the power of that, okay? Look at the power of that. So, you know, if you got in right here and you had a free contract system, you know, you're making several $1,000s on this play, right? Very predictable, folks. You can also trade the micro gold. Let me just bring up that one to show you for the smaller accounts. Okay, micro gold is going to, you know, follow the exact same pattern. It's just the micro of the gold. Okay, but again, initial margin is only $341 a contract overnight. Okay, so let's say you have a $5,000 account. You want to trade 1 or 2 contracts, right? No issues there. You can build up that account on these high probability trades. Okay, or again, the ETF GLD. Sorry about that. Again, it's going to follow the same pattern. Okay, so you and these. Typically, I will do spread trades on when I'm doing my call spreads and so forth. In this particular case, with these high probabilities, a lot of times, you know, I'll just do naked calls because the probability is going to move in that direction is so high. As long as I'm okay with my initial risk, I'm going to place that trade. Okay. So again, you can trade different instruments knowing the seasonal. Gold is one of my favorite seasonal trades. Again, right around the middle of December. Okay. Couple other examples. Broadcom. This is a call spread that I did, and right around February here. Very good seasonal long. Stayed in it for a couple weeks there. Got out with a 40% return. Okay. I don't like to be in during earnings there, and made the return 40%. I usually shoot for anywhere from 40 to 60%, and then I get out of the trade. Okay. Very predictable. 90% accuracy during this time frame. Price is going to be higher though, folks. Okay. Again, if you know that information, right, lots of ways to make money. I like to trade the grain futures. Okay. In this case, though, bring it up. There's a beautiful seasonal short in corn. Okay. And it was actually all through here, but I got in on this particular trade on June 28th. So instead of trading the corn futures, which I did, but I wanted to show you another option trade, I did a put spread on corn, got in here, got out right here. Again, just a few days, 60% return, right? But corn is, again, very predictable. This short time frame, year after year, you know this, right? There's a lot of ways to play. You can continue to put spreads on, or you can trade the futures corn, which is what I love to do. The risk isn't too high with that corn, trading the futures. And again, once you hit profit target 1 when you're trading the futures accounts, you can then get out of danger, put a break-even stop, and continue to make some good money. Another example, J&J. Again, these are all trades I just recently did, folks. Johnson & Johnson, got in 2 days later, made my profit target. So I got in at $1, got out at $1.64, 64% return. Okay, it doesn't always work out quite that fast, but again, these are strong seasonals. Knowing that Johnson & Johnson year over year, during the month of July, end of July into August, for example, go much higher, right? High probability you're going to make money on these trades, folks. High probability. And again, I don't get greedy. I got out usually around 60%. I'll start getting out. You can certainly hang on. You know, you'd be up even more now, but again, I don't get greedy. I'm okay with 60% return. Many folks will wait till 80%. After 80, I would definitely get out and take your money and move on to the next trade. But the way I've been the most successful to build up the account as far as options is anywhere from 40 to 60% take your profits. Okay. Okay. Let me just give you a couple other examples here. Those of you that do like to trade the metals, April's a strong month in palladium. So again, what you do is you look for, knowing that, you look for the trigger, okay? I would have got in right here. Boom. Okay. Well, let me check for questions real quick. I appreciate it. Okay. So typically, a couple questions on stop losses. So when you're swing trading, let me just bring up one of the trades there. So when you're swing trading, my stop is typically about 2 times my initial profit target 1. Okay. So roughly, my stop loss is 2 times my initial profit target 1. And the reason why I can do that is because I'm over 80% accurate. Okay. This year to date, I'm 86% accurate, which I'm going to show you in a minute. Okay. You need a room to run, and then my profit target 2 is usually the same, almost the same size as from the stop loss. So from here to here, almost the same to here and here, in general terms speaking. Okay. And yes, I've been trading live, folks, since 2006. Absolutely. I think, you know, simulating is great for practice, and I would always recommend simulating or using a very small amount to trade to get used to the psychics, right? But you have to trade real money with the pressures of trading in order to get good at it, okay? All right, I'm going to switch over to my slides again. So again, this is on the website, rightlinetrading.com, my 2018 track record. You can see, just real quickly, 89% accurate. If you were just doing one contract on these trades, these are all trades that I, you know, put the video newsletter out. One contract trade, we're at profit target 1. Let me just back up and show you again. So when you're at the profit target 1, you cash out, okay, every single time one contract. You'd be up 21,000 so far this year. If you were doing the 2 contract system where profit target 1, then profit target 2, you'd be up 21,791, so very close this year. And then the 3 contract with the runners, you'd be up almost 25,000. But the key here is, you know, you can build your account up, 89% accuracy. Historically, I've been 80% or higher. It's just because, again, how many trades per week? I don't force it. Typically 1 to 3 trades, future trades a week is what I'll put out to my subscribers. If there is a week that there's nothing happening, though, I won't have one, which hasn't happened, but I wouldn't have no problem not doing the trades if they're not there. And then just recently, again, because of the demand people are asking, I'm doing 1 to 3 option trades a week as well. So depending on if you like to trade options and futures, you know, you have more to choose from. Other than that, there's usually 1 to 3 trades for options and 1 to 3 trades for futures. So again, micros, if you have a smaller account, you just want to build up, use the micros. You have a natural gas option, a crude oil option. Most currencies, other than the peso, most of the big currencies will have a micro. Corn has a mini corn, soybeans, wheat, micro gold, okay? And again, I also love to trade options based on the seasonals. So again, if you're going to trade bonds, 30-year bonds, you can also trade the TLT as well. And again, just showing you when you're in toss, if you want to see your margins, initial margins are all listed right here into that. So you can see the M's, which are the micros, are very low margin, so that you can get used to trading and build that account up. So typically, if you're going to trade E-micros, have a couple $1,000, trade one contract at a time. And the reason I say that, folks, over simulating or simulate first, then do one contract, just to get used to trading live, especially for the folks that have never traded live before. Okay, if you're going to trade one contract, let's say on the Australian dollar, okay, you're only risking maybe $100 a trade. Okay, but that's a nice way to start building that account up with over 80% probabilities, right? Same with options, depending on the option, obviously. I like to do a lot of $1 and $250 spreads. So you're risking, let's say, 1,000 to make 1,000, but with 80% probability, I'll take those odds every single time. Okay, so again, let me just check questions one more time before we get into the offer. I have my doctorate in finance. I have a PhD in finance. Great question, right? Okay, so for today, again, basically with my service, you get a trade, you get trades via video newsletter. It'll be a video that's emailed directly to you, as well as text alerts. If you're in the United States and if you want the text alerts. Again, typically the trades under most circumstances are in the evening, because once the markets close, I do my analysis, because I trade off the daily chart, and then I'll pull out, if I see a trade, I'll send it out early evening so that you can get it set up and trade, okay? Again, all my trades have my entry. They're not all market orders. Some are just like that mini crude I showed you. They're a limit order in many cases as well, depending on what I'm looking at. I don't chase the markets. You're going to have an entry. You're going to have a stop loss and my profit targets. Okay, again, you can set that up ahead of time so that you can walk away from the trade. Every Sunday, I get a week ahead. Here's kind of what I'm looking at. And, I usually do an update at least every other day, at least, depending on how busy, what things are going on, just to keep everybody in tune and as new trades come and so forth, especially now that I'm doing more option trades as well. Typically, worst case, every other day you're getting an update from me. So today's offer is just a $9 risk-free trial for 30 days. Okay, basically you'll get support, VIP support via email and phone from me. You can call or email us. Also, I do live monthly coaching calls. So every month I'm going to start doing where I'm going to have a webinar like this where I go over like a Q&A session and so forth with everybody. Kind of give them a feel for maybe some bigger picture things that I'm looking for. Most of the videos that I send out, folks, with my alerts are 4 to 5 minutes, because I don't want to have them too long where people are missing the actual trades. So I thought, well, you know what, I'm going to start doing live monthly coaching calls where I can talk about some more advanced topics and why I see some big moves happening and so forth. And you have my access to my personal email. So again, $9 for 30 days. And then if you're interested after that, $99 a month after those 30 days. But you can cancel anytime, risk-free, absolutely. My intent is if you're working full-time and you just want to have a really good system in place where you can set up trades at night and then go to work the next day, or if you're even day trading, like I said, a lot of the feedback I've had recently is from day traders saying, thank you, Dr. Keith. I know that you've been really bearish corn, for example, a month ago, and I've been just doing shorts, day trading corn, things of that nature, and then obviously the popular option plays as well have just become spectacular. So I love the feedback from my subscribers as we continue to grow this service. So again, for $9, risk-free. That is my email, drkeith@rightlinetrading.com. You can just call the office if you'd like to sign up for the trial, or there is a link in the chat, rightlinetrading.com/drkeith, where you can do the risk-free 9-dial trial. If it's something after 30 days, for whatever reason you're not interested or you just wanted to give it a shot, you'll just cancel it and no worries there at all. Okay? Let me check questions one more time. All right, it looks like no more questions. Perfect. All right, so again, hopefully I'll see you on the other side, folks. Feel free to reach out if you have any questions. Other than that, Tanya, I'll turn it back over to you, and I appreciate everybody's time.